Hey, good evening, traders. This is Jeff with the nightly update on the NASDAQ and the Dow Jones in relation to my timing system, which went negative here. And, we've had some nice downward pressure in the markets. And essentially, I took half off with this black line. Hopefully you can see that. And what I'm doing is I'm looking for a re-entry point as long as my overall timing signal remains bearish, which it is. It's firmly bearish. And what I'd like to see is I'd like to see the NASDAQ come back up to this upper trend line, which could correlate nicely with the trend lines, this wedge formation that we got on the RSI and the 60 level, which is oftentimes a resistance level when the market is in a corrective phase. You can see it was here and here as well. We broke down out of this little consolidation pattern, and I think we're essentially just bouncing off some of this support. And like I said, I would either like to see it come up to this level to get short, or I would like to see to short on weakness. But yeah, we'll see how it plays out. I'm not gonna, it's kind of the same thing here on the where is it? The Dow. This is the 60-minute of the Dow, and we have a downtrending channel here. We could probably move up another 150 points where we would hit resistance here, and again on the 60-minute chart. So those are the levels that I would like to see the market kind of inch its way up either tomorrow or Friday. Maybe get short before the long weekend. Which would not be the easy trade to do. But normally the market rewards you when you take a trade that's not easy, and I'm doing that in quotation marks. So even though we bounced today, it's relatively weak in the overall big scheme of things. Here we had this inverse head and shoulders that was forming, which this line could prove to be resistance now, combined with the 50-day moving average. Volume was muted on the NASDAQ, so I expect us to trade lower. As I said, we could test a little bit higher. And would like to see that, but we could just go down from here because we closed off of today's lows, which is not a bullish sign. What I wanted to show you with this chart was how the percentage of stocks that are above the 200-day moving average, that's this gray area, is starting to move lower. It's starting to lead the market lower, so it's definitely not a good sign. And you can see how the RSI is in this steady lower lows and lower highs. So the next stop would be down in the 30 level. And then at that point, you really need to see if this market is going to really crater. Here it bounced. So we would be testing that 30 level for the second time. We may not be able to hold that line, and we may go into oversold, and this market could really start to see some accelerated selling pressure. In my opinion, we're getting into an area where there really could be some accelerated pressure because we've had, like I said, these previous corrections, and then the markets have bounced but have failed to really show the strength that it had before. So essentially here, the market was under a lot of buying pressure. The RSI was very overbought. We went down, bounced off to 30, and then when we went up, we didn't really get into that overbought level. Basically, that's a lower high, even though the market itself was making a higher high, so there's divergence. The last thing that I wanted to talk about really quick, because I'm running out of time, are some of the previous leaders. Apple is really starting to show distribution. Alcoa in the aluminum sector, and then the banks. Like, these banks are just in horrific shape. That's definitely worrisome when you look at the whole big picture and think, okay, well, if the banking sector is in such disarray, what is that telling us about what's going to happen when QE2 is going to run out? If there was going to be a QE3, you think that there would be some buying in these banks. There's always people who in the know. So that's definitely something to keep track of. And then, even though I am extremely bearish, here are a few charts that look decent. But these aren't stocks that are going to necessarily, and throw Netflix in here, these aren't stocks that are going to lead this market higher. So stay bearish, guys.